You do not sell your Bitcoin. Thank you.
For years, Michael Saylor turned never sell your Bitcoin into gospel. And this week, on a Q1 earnings call, he told the world that Strategy is going to sell Bitcoin. The media ran it like a confession, and Bitcoin Twitter spiraled into civil war, and almost no one stopped to look at the math underneath. Today, I'm going to show you why this controversial announcement is actually the most bullish thing Strategy has ever announced, and why the data behind it is confirming the Bitcoin supercycle. This is Truth Block. I'm Hurley. Let's mine truth. Okay, so let's be honest. It's funny. The man stood on stage at Bitcoin 2022, crowd going absolutely wild, and said, "You never sell your Bitcoin," like it was carved in stone. He tweeted it a dozen times. He made it his thing, and now he's selling. Next, he's going to say there is a second best. The memes were immediate, they were savage, and they were deserved. But here's where the laughing stops and the logic begins. Because the panic this week was about a headline, not a policy. No Bitcoin has been sold, not a single sat. This was a forward-looking announcement on a Q1 earnings call, and the actual policy, when you read it, is the opposite of what the headlines would suggest. So what did Saylor actually say? Let's go right to the most important clip from the call. Strategy holds over 818,000 Bitcoin. That's roughly 3.9% of all the Bitcoin that will ever exist. They bought their stack at an average cost north of $75,000 US. They've raised $8.5 billion through STRC alone in 9 months. And on this call, Saylor introduced a new word for what he's about to do.
Yeah, we'll probably sell some Bitcoin to fund a dividend just to inoculate the market, just to send the message that we did it. Look, the company's fine, the Bitcoin's fine, the industry's fine, the world didn't come to an end. And if you're a short seller and your thesis is the company's got to sell equity in order to fund the dividends, I would like nothing better than to, rip your wings off.
He's not describing a liquidation. He's describing a vaccination. Sell a tiny amount, prove the business survives, and kill the narrative that Strategy must dilute equity to pay its dividends. It's a reaction to the mainstream narrative from normies that Strategy is trapped, that they have to keep selling stock and diluting shareholders just to keep the lights on. And what Saylor is saying is, watch me fund this with Bitcoin instead, and then watch how much more I buy on the other side. And then he laid out the model in the simplest terms he's ever used.
Sometimes we will sell a Bitcoin derivative because it's in the best interest of the company, but it's not necessary. This chart really illustrates that you can strip the business down to something very simple. You buy Bitcoin with credit, you let it appreciate, and then you sell Bitcoin to pay the dividend. And as long as you're issuing credit in excess of the break-even point, then this business works and grows forever.
That's the whole model in about 30 seconds. Buy the Bitcoin with credit, let it appreciate, and sell a tiny fraction to pay the dividend. And the break-even point? 2.3% annual Bitcoin appreciation. That's it. If Bitcoin grows more than 2.3% a year, Strategy can fund its dividends forever without selling a single share of stock. They're not betting on a moonshot, they're betting on Bitcoin doing what it's done every single year of its existence. Now here's the part that got buried in all the noise. Strategy has roughly $2.2 billion in unrealized tax losses from Bitcoin they bought above current prices. Selling those specific coins lets them harvest the losses, offset gains elsewhere, and lower their effective cost basis. Saylor called it picking up $2.2 billion lying on the floor. That's definitely not panic selling. That's a guy who built an $8.5 billion capital machine in 9 months, optimizing his treasury. And then he dropped the mask entirely.
But the bottom line is, if Bitcoin, if the macro environment turns risk on and expands, and Bitcoin rallies, our equity rallies, it's go time, we're going to go, and we're going to go with the credit. Like, we're going to use the credit. Make no mistake about it. We want to see the MNAV, the equity is undervalued. We want to see the MNAV expand to 2, 3, 4, 5, or 6. And nothing would make me happier than to rip the faces off of all the skeptics and the shorts and drive the equity to the moon.
That's the conviction underneath the strategy. He's not hedging, he's hunting. And right now, we're in peak bear and short season. Now, Saylor's always been the showman. CEO Phong sat down with Mark Moss and walked through the balance sheet in a way that makes the too good to be true objection very hard to sustain. And some numbers from this interview tell you who's actually buying this thing. According to Phong, STRC is 80% retail owned. and the average position size is $1,000 to $10,000. Most of these buyers likely don't know much about Bitcoin at all. They're just looking for the yield. They're on-ramping to the Bitcoin ecosystem without ever understanding it, and Phong Le thinks that's exactly the point.
And this is the part I think people don't quite understand, is behind the ability to pay that capital, we have $2.25 billion of cash that we put on our balance sheet to make people feel comfortable that there is an ability to pay the principal beyond just, depreciation in Bitcoin, which is unrealized, and issuing shares above a net asset value, right? So we have that. And then behind that, we have $60 billion worth of Bitcoin. So you ask yourself, am I going to get paid the principal, right, back? Well, we have literally $60 billion of Bitcoin on what is now about an $8 billion asset class, right? So I think you're pretty, at least at this point in time, pretty secure that we'll pay the principal back. And then are you going to pay 11.5%? Well, we have $2.25 billion, which at this point is about 18 months worth of dividends. And beyond that, we can also sell our Bitcoin if we need to pay the dividend. So there's this idea that 11.5% is too good to be true. What are the risks? The risks are fairly well disclosed, but we also have what I would call a pretty bulletproof balance sheet behind it, right? And so you got to peel back the layers of the onion for sure, but when you peel it back, we're pretty transparent about what's behind it.
Yeah.
So I don't think it's too good to be true.
Yeah. And as you said, though, you could choose not to pay it, but that would sort of be the death of the company.
Yeah, there are a lot of things we could choose. Companies pay dividends. They could choose not to pay it, but when they do that, then the stock price goes down, the equity value goes down. Like, why would we? The only reason we would choose not to pay it is if we're in some black swan, the world is ending, Bitcoin is exploding kind of a situation, right? What I tell people is, what would be that situation? If Bitcoin was to draw down 90% and sit there for 5 years, there would be a situation where we would probably not pay the dividend, right? And if you think Bitcoin is going to go down 90% and sit there for 5 years, that means you pretty much think Bitcoin is going to zero.
It would have to fail, basically.
It would fail. It would go to zero. And if you think Bitcoin is going to fail, don't buy Stretch.
Yeah.
Don't buy MSTR. Don't buy Bitcoin,
Yeah.
right? Like, don't buy digital capital. Don't buy digital securities, equity. Don't buy digital credit, right? And for those who think that, we can argue till we're blue in the face. It's okay. You're welcome to have your views, but then you're also welcome not to buy any of our securities.
Yeah.
So he's not hiding the risk. He's naming it. If you believe in Bitcoin, the balance sheet is bulletproof. Strategy has $60 billion of BTC backing an $8.5 billion instrument, plus $2.25 billion in cash that covers 18 months of dividends. But if you don't believe in Bitcoin, none of these numbers matter or will convince you. Then Phong Le zoomed out 10 years, and this is where Strategy's ambition gets real.
Now let's talk about 10 years out. 10 years out, we have a finance world that is fully decentralized finance, has eaten up traditional finance, and Bitcoin becomes the digital reserve asset of the world, right? It'll be as important as the US dollar. Governments around the world will be owning Bitcoin. They'll own gold. They'll own the US dollar, and we'll be the largest holder of Bitcoin in the world.
Yeah.
That's sort of the world I see in 10 years. And, what's happened in the last 2 years and next year, I'll call it the 3 years, 2025, 26, 27, we'll look upon as the most transformative time. It'll be the digital revolution, right? 10 years from now, people will look back and think, it's just, what do you think about the internet today? You don't think about it as this revolutionary product. You just think about it as its existence.
Yeah.
The internet is. The internet wasn't invented, it just is.
Yeah.
People will think about that about AI 10 years from now. Nobody will be debating whether AI is good or bad. AI will just exist.
Yeah.
10 years from now, people won't be debating, is Bitcoin good, is Bitcoin bad? It'll just exist, like the US dollar. And if that's true, we'll be the largest holder of Bitcoin in the world.
Yeah.
So here's why all the panic over Strategy selling is so completely backwards. They're not getting smaller. They're getting bigger. They're selling a fraction to fund a dividend, buying multiples more through new issuance, and building a capital machine that accelerates the more Bitcoin appreciates. The selling headline misses the entire point. And there's actually a deeper irony here that I think the Bitcoin community should sit with for a second. Never sell your Bitcoin has turned into a kind of gospel. And I get it. Everyone, especially those under 60, should be saving in Bitcoin. But money that can never be spent isn't money. It's a relic. Nobody plans to die with their keys in a vault and their Bitcoin unspent, or at least very few of us do. Bitcoin is peer-to-peer digital cash. It's both the world's best store of value and the world's best medium of exchange. The goal is to save more than you spend. But never using the network, never using Bitcoin as money, defeats the whole purpose of money. Right now, every time you spend Bitcoin, you trigger a capital gains event. That's a real friction. Strategy is dealing with the same thing, except they're smart enough to use it in their favor with the tax loss harvesting. But if Bitcoin is ever going to function as money people actually use, capital gains on it have to go to zero. I do think that will happen eventually. You can't tax people for spending their money. And when that happens, one of the biggest never sell excuses will disappear entirely. Strategy using Bitcoin to fund STRC, deploying it as money to build the biggest digital credit product in history, that's not a betrayal of the thesis. That's the thesis working. We should actually want this. We should want Bitcoin being used as money. That's the whole point. Okay, so that's the strategy story. The selling headline is noise. The math is actually bullish. The balance sheet is deep, and the capital machine is purpose-built for exactly one kind of market. Which brings us to the bigger question. Are we in it? Because Strategy didn't build this machine for a 4-year cycle. They built it for a structural bull. And Strategy is positioning like the Supercycle is an inevitability. Saylor's own words at Bitcoin 2026 confirm it. And Phong Lee's 10-year vision on Mark Moss confirms it. Everything about the evolved capital structure, the perpetual preferred equity, no duration, no maturity, no forced liquidation, all of it is designed for an asset that goes up structurally over time. Not in a perfectly timed boom bust, but in a long grinding repricing of the hardest money ever created. And so what does the data say? I've been saying the 4-year cycle is dead since 2025. And when October hit and Bitcoin topped at 126K and then dumped over 50% over the following few months, it looked like the cycle was right on schedule. The cycle bros definitely had their moment. And I get it. When you say the cycle's dead and then the price drops 50% right on schedule, that's a rough look. But here's the interesting thing. Bitcoin doesn't recover like this in a bear market. A bear market doesn't see ETF inflows hold steady even during geopolitical tension and war. A cycle top doesn't see the largest corporate buyer in history accelerate purchases through the bottom. I'm convinced that what we went through was a mid-cycle correction, driven by macro, driven by deleveraging, inside a larger structural bull. Jordy Visser has been writing about what he calls the Bitcoin IPO moment. The idea that Bitcoin went through a massive distribution, like founders cashing out after an IPO. And now that stage is over. The new buyer base, ETFs, retail, institutions, is structurally buy and hold. Here's what Visser said about the next breakout.
Bitcoin kind of tells me that the next time it breaks higher this time, if it does, when it does, whatever the case is, I don't think this one is going to stop as quickly. I think you're a lot of people that have been selling for a long period of time that have been moving out. And I know retail and ETFs are buy and hold, and they're going to be raising their weightings. And so I wrote a piece on this on the Bitcoin IPO. I believe we've had a massive distribution of which makes sense. And I think eventually when it breaks higher this time, I don't think it's going to stop.
The people who were always going to sell, the miners, the early adopters, the traders, they've sold. What's left is a buyer base that doesn't sell dips. It buys them. Now, I want to be careful here. I'm not saying that the breakout is tomorrow. As of recording, we're back below 80K. There are probably some longs to be liquidated in the 70K range before we start moving higher. As always, we have to have patience. But the structural alignment, the supply side, the demand side, the holder composition, all of it is pointing in the same direction. The 4-year cycle is dead. And that's where the two halves of this episode snap together. Strategy didn't build a capital machine for a cycle. They built it for this. The selling headline, the evolved model, perpetual preferred equity funding Bitcoin accumulation at scale, none of it makes sense if Bitcoin is in a 4-year boom and bust trade. All of it makes sense if Bitcoin is repricing structurally over the next decade. Strategy and the supercycle are the same bet, and the data is starting to back it up. The stock dropped on the headline, Bitcoin has been mostly flat, and that decoupling tells you everything. The market hasn't processed this yet, but it will. But here's what grounds all of it. Bitcoin doesn't care about Michael Saylor. It doesn't care about Strategy's balance sheet. It doesn't care about your cycle model or my supercycle thesis, or whether the 4-year pattern is dead or alive. Tomer Strolight put it perfectly this week. He said this market can look like a storm if you try to comprehend the whole thing in its hugely anarchic entirety. But there is a safe, calm, and quiet eye of the storm, and that is simply holding Bitcoin in self-custody. That's it. That's the floor underneath everything we talked about today. Saylor can sell, Strategy can evolve, or it can die. The cycle can do whatever it wants. None of it changes the protocol. None of it changes that another block will be created in 10 minutes. None of it changes 21 million. None of it changes the fact that if you hold your own keys, you hold the hardest money humanity has ever produced. So sit peacefully in the calm eye of the storm and live your life. All right, that's all I've got. But before we close, I wanted to hear from you. Is Saylor selling Bitcoin bullish, bearish, or something else entirely? And what's your self-custody setup? Are you in the eye of the storm? Let me know in the comments. And if you enjoyed this one, don't forget to hit the like button and share it with someone who saw the headline and panicked. And of course, subscribe to Simply Bitcoin if you haven't already so you don't miss what comes next. We'll see you next week.